Welcome to the Canadian Dividend Stock channel. And today I'm going to talk about 5 top dividend Canadian bank stocks which were found in Canada. And those bank stocks are mostly stable and they gave quarterly dividend to customers per share. So let's move ahead and find what's in our list today. So the first stock today I'm going to talk about is National Bank. So the so the National Bank stock is the sixth largest sixth largest chartered bank in Canada and the largest bank in Quebec. While a majority of its revenue are from Quebec, National Bank has been expanding across Canada in recent times. It also has an international presence. The bank reported a 42.40% growth in net in the third quarter of 2021, and its stock price has posted a 53.27 increase in the last year. The current dividend yield of the stock is 2.79% as of October 18th, and is lower than the TD and RBC. That said that the National Bank appears prime for growth, and it has recently seen a strong year-over increase in the US and international operations. Even though it's the smallest in the sixth big bunch, the National Bank of Canada is easily one of the best Canadian bank stocks there is. It has been growing quite consistently for the past 2 decades, and despite its local focus, especially compared to some of the Canadian internationally focused banks, the bank has shown amazing resilience and recovery potentials. It is great in the great recessions. The bank lost about 50% of its valuations by December 2008, but it recovered and grew it to pre-recession value before 2010 was over. So the recent 2020 drop was almost as brutal, and the stock like lost about 48% of its value. It hasn't fully recovered yet, but it's quite closed. National Bank of Canada is also a dividend aristocrat and has increased its dividend for 10 consecutive years. It's offering a decent 4.1% yield right now, though it's you get a chance to buy into the company during a market crash. You would be able to lock in a significant better yields. So considering all this, if you like invest 10,000 in the company when you are 30 and let it grow at 12.4% a year, you might have like about $500,000 in the company by the time you retired at 65. As per last year's report, the bank had 2.7 million clients and 495 branches with 565 billion in the asset under management. The bank generates most of its revenue in the province of Quebec, like 55%. Rest come from the other province at 26%, and from international businesses 19%. So let's move ahead and go to the next one. So the next one in our list is Toronto Dominion Bank, which is also known as TD Bank. It's one of the largest bank in Canada. So this bank like rooted going back to 1855 and is an amalgamation of the Bank of Toronto and the Dominion Bank. TD has one of the widest reach of Canadian bank with 26 million customers around the world globe. On the innovation side of things, TD is a leader in online banking technology with 15 million plus active online and mobile customers. The bank reported a 57.70 increase in its net income for the third quarter of 2021 and a significantly increased US retail income. TD stock price has exponentially a 46.60% growth over the last year, and 3.63% dividend yield is competitive. If the Royal Bank of Canada is the king, then TD is definitely the prince. It's the second largest bank by market capital and by the number of branches. TD is also very close to Royal Bank's growth rate with a 10-year CAGR of about 9.86%. Though, if you consider the dividend yield of the two right now, TD might be the better pick. Another advantage that the TD has over other bank this list is its dividend growth rate. Its 25-year dividend CAGR rate is 11.3%, and since its stock is also less costly than other bank stocks, you will get more share for the same amount of investment, and a higher dividend growth rate would ensure that payout increase benefits you more. TD can also be considered the most American bank on the list. In 2019, about 2/3 of its premium retail earning came from USA. Its footprint is not as extensively globally as Royal Bank's is, but in North America, TD can go toe to toe with its big brother. It's the fifth largest bank in North America, branches with over 2,300 locations in total. Its digital footprint is also impressive, 13 million users and growing. In the total number of clients, it outshines almost all the banks and on the list since it serves 26 million people across the globe. TD's digital front is also a very notable feature since it's the next frontier in banking, and if TD is taking the lead in this, the chance are that it might be also to be grown with business as much as faster than other banks in the country. So this is a good one, I believe. The next one in the list is Scotia Bank. I believe many of you know that they are one of the most significant, likely benefited bank in Canada right now. So this bank was founded in 1832. It's reported a quarterly earning growth of 94.9% in the third quarter of 2021. Stock price wise, it has increases 42.92% in the last year. If we're on the fence about Scotiabank, its dividend yield is one of the best for Canadian bank stock at 4.52%. If we had arranged this list by the dividend yield, the bank are offering Bank of Nova Scotia would have topped the list. It's the third largest bank in the country, branches and has about 950 branches in the country. It serves about 11 million retails, commercial banking, and small business customer in the country. Impressively enough, the bank is offering service to just as many international customers. It has branches outside Canada and inside, and almost double the domestic footprint. Outside Canada, the bank generates most of its revenue in Latin America, more than 2/3 of its total international revenue. The Caribbean and Central America makes up about 1/4 of its total international revenue, and the rest came from Asia. This impressive global footprint does not help its investor with their capital growth perspective much, and the primary reason to invest in this stock would be the amazing yield it's offering right now. It has also unfortunately been the slowest recovery bank after the March crash. If you want to lock in a good yield, the time might be ripe because once it recovers, the yield would shrink and to make up the pandemic revenue losses, the next year footprint growth might not be very generous. Still, it's a very, very good stock to buy as of now. Going to the next one. Israel Bank of Canada. As you know, it's one of the most customer-based bank in Canada. It has about 17 million customers who serves are served by 86,000 employees. RBC operation extended beyond Canadian shores with a plethora of financial services being offered, and the clients in the US state and 27 other countries. The bank reported a 4% increase in its net growth in third quarter of 2021, and has seen its stock price rises by 35.89% over the last year. It had also a decent dividend yield of 3.31% with a 157 years history and long record of stability. It is not difficult to consider that the Royal Bank as one of the best Canadian bank stocks today. I should not be forget to mention that RBC stock is also Canadian dividend aristocrat, as you may know, like because this stock has like 5 plus consecutive increased dividend, and is part of S&P Canada BMI, and trade on the Toronto Stock Exchange, and has like capital of more than 300 millions. But perhaps the best reason to invest in this stock is its consistency of growth. Its 10-year CAGR about 10.7%, and if the recent market crash hadn't thrown many number in this area, the rate would have remained consistent or grown. Still, it's enough to convert your like 10,000 into 350,000 in 35 years. And even though everything is going digital, the Real Bank can claim the largest national footprint based on the number of branches. It's also enhancing its digital banking platform and introducing several emerging investment product like ETFs and other funds that can be invested in. So going to the next one is a Canadian Imperial Bank of Commerce, which is like CBC, is one of the Canada's largest bank with 10 million customer in Canada. And it has been about like 45,000 employees with 122 banking center and 3,000 plus ATMs. The bank reported a 7.6% increase in its net revenue in third quarter, with a strong performance in its US commercial banking and wealth management businesses. It has a competitive 3.96% dividend yield and a decent 8.9% 5-year CAGR. But if you can invest a sizable sum in this bank stock now, you would be able to lock in a very juicy yield. And since it's also been a dividend aristocrat for 9 years, the bank is highly unlikely to slash its yield in the future. Most of the bank revenue are generated in house. In 2019, only about 13% of it, the revenue came from the US banking and wealth management market. One of the noteworthy things about this bank is its resilience. Despite not being a good growth stock in the past, CIBC like showed one of the best recoveries in the industry after the market crash. Recently, its growth has been a bit stale, and it might stay there way for a few more years till the economy and stock market both properly recovered from the pandemic's devastation. But if you are willing to hold on the securities for a long time, it might outperform many of the like flashier growth stocks you might want to invest in. Its balance sheet is stable, but not very strong. But the like bank has been increasing its revenue steadily for the last few like 5 years. Um, this means that like even if the stocks is not performing well, like mimicking, the institution is actually improving its return. So this would be a good pick for investment also. So finally, I'd like to thank you for watching the video, and thank you for subscribing to the channel, and have a good one.